We're joined every week by the Executive Vice President of CHF Capital Markets, Mark Lackey, and we talk about the big picture on a commodity, and then we talk about specific ideas.
That's right,
So
Pat.
your big picture is copper.
Right.
You know copper's in bad shape.
You know, Pat, I guess I would have to say the following. It's kind of funny. When I go back to 2011 and 450, everybody thought it was going to 6. I thought it was way overpriced. And now that we're down in the 250 range, I'm hearing people saying $2, 150. I guess, Pat, I take a somewhat different approach because I dig down into the numbers. So let's go to China. And people say to me, well, the property market's not great in China. That's true. Residential and non-res are not growing. And China's not growing as much as it once did. So on balance, you would say that's not so great for copper. But take a look at the grid market. In other words, the power grid market that they're expanding. Right. That's right, Pat. That's actually half of all the copper used in China. And if you notice last week, China came out with an announcement, said we're going to put 24% increase in our spending plans into the grid. Now, the one thing I have always found about the Chinese, when they say they're going to do something in those kind of infrastructure plays, they tend to do it. And this is not like building, say, quote, a bridge to nowhere. This is legitimate. I mean, they need to upgrade their grid because their power plants tend all to be on the East Coast, and there's an awful lot of people that live in other parts of the country that don't have a lot of accessibility to reliable power. So if I look at the numbers, Pat, I see a significant increase in copper demand coming from that sector, along with the auto demand that I've had to revise my auto sales numbers in China up to 25 million this year and 28 million next year. So I think that, yes, there are some areas of weakness in the copper market, but I think they're offset to the point where the demand is decent. And then I also believe, if we'll talk a little later, is why I think supply is going to slow down. So on balance, I don't think 245, 250, 255 is sustainable for a long period of time. Now, I'm not roaring back, Pat, but I'm up to 290 at the end of next year and about 320 at the end of this year and 320 at the end of next year.
So it's pretty modest. It's, 10%,
right,
15% growth per annum.
But compared to, I'm now hearing $1.50s talk again.
I haven't heard that, but
well,
okay.
I heard it from somebody we both know the other day. Somebody that used to be a chief economist on the street is suggesting $1.50. So I think that that's a highly unlikely scenario. But we are seeing, some of the U.S. banks talking 2.25, 2.15. It's not sustainable, Pat.
How big is China in the world? I mean, you say that they're going to increase their power grid, but how important are they to the world?
Well, they're about 45% of all the copper produced, demanded in the world. Now, admittedly, their number has jumped because Europe's been so weak. And I'm not counting on Europe to give us a whole lot of growth here in the near term. But China is the biggest player by far. And I keep pointing out, you see, I was at a conference the other day and somebody suggested, well, the property market's the biggest factor. No, it's not. It's the grid market. And given what they've just announced, I think that's a really big number.
Okay, but you and I have talked about this in the past, and you see tremendous growth coming from India as well in those parts of the world.
That's right.
India, same thing in the power grid?
Yep. Well, in fact, that's a good point, Pat. I'm glad you brought that up. The Prime Minister has said if there's one problem in India that's plagued India for a long period of time, it's been infrastructure. There are more people without power in India than in China. I found that surprising. I kind of thought it would be the other way around. So India does need to improve its power grid, and that's another situation they're also looking at. So another potential area for copper that, again, people tend to look at copper, they think of autos, they think of houses, they think of buildings, and they go, well, geez, 2 out of 3 doesn't look so good. But they're forgetting these special situations, and that's why I always say to people, you got to dig down on the numbers.
Okay.
And it's no different. Sorry.
Okay, so then let's look at that other side, because I saw 2 reports even in the last few weeks that the supply, there's lots of copper around.
Well, again, Pat, let's go back to what we saw. 450 copper back in 2011, $4 in 2012. We did bring on some supply that has turned out to be somewhat excess because inventories have built up a bit recently. But I would say to people, look at all the recent announcements in the Philippines, in Peru, in Chile, and in Argentina, where people have actually postponed what would have been some more additional copper coming into the market. So while we may have a bit of an oversupply in the short run, I think, Pat, that's going to be worked off here because, again, as I said in my blog yesterday, at 250 copper, I estimate about 10% of present production can't cover operating costs. Well, people aren't going to keep losing money forever. I mean, I was in that business, and at some point you will shut down if you continue to lose money. So I would argue 250 is not sustainable, and even on a supply basis. Plus, the grades keep going down in the world, Pat. So when grades go down, costs go up. So I think that's one of the reasons why I see a stronger copper market.
But by the same token, you won't see the kind of growth in price because there's this potential supply that's there.
Well, it's a good point, Pat. Like somebody else said to me after yesterday's blog, well, Mark, why aren't you back at 4.50? If you think the market's really tightening, well, because if we got up into the 4.50 range, supply would come back in.
Yeah, exactly.
So that's why I've got an outlook probably over the next 3 years, where even we get maybe back to 3.50 in 3 years, which is a pretty good number if you're in these stocks because they've all been beat up so badly. But, you know, Pat, you're right. I'm not back to the levels we were at in 2011 or 2012 because there will be a supply response.
Okay, so let's go through your picks.
Right.
I've never heard of Coro Mining.
No, Pat, that's one that's been under the radar screen, and I must admit, I looked at, when I was going to do the show, I looked at some of the producers, mid-cap producers, and thought that's fairly safe. But then I looked at all the near-term producers, and most of them don't have much money and have issues. So I was able to find 3 companies that actually were able to raise money recently, and the markets like the fact that they like their prospects. So Coro, they've got projects in Chile, which is my favorite country in South America. I mean, it's kind of one of the best copper producing countries in the world. It's a pro-mining jurisdiction. What they have, of course, is they've got, in that part of Chile they're in, there's lots of infrastructure, water. Environmental issues aren't a problem. The locals are very pro-mining. In most of Chile, that's true. There are some exceptions. So on the management team, Pat, I really like it because they have found other mines they've produced over time. And so, you know, we've got an experienced mining team here. And right now, as I said, they've got some near-term production. And they were able to get money in the last few months when most people in the copper business in the last few months, given the price has fallen as much as 40 to 80 cents in the last few months, they haven't been able to finance. So everyone I have here today, including Coro, has the ability to keep going forward, Pat. That's what's critical here in order to take advantage of what I think are higher prices coming.
Okay, so that's Coro. St. Augustine, that's an old gold company.
Yeah, that's right, Pat. It's copper gold. They've got a major project in the Philippines. Again, I like the management team here. One of the things they've done recently, they've added 2 senior people to their staff who are from the Philippines and have been in the Philippines mining industry. I think that's really important. You've got to have local people in your senior company that understand, the government policies, that know the geology. I think those were 2 excellent additions. The other thing is the Philippines government just came out recently and said we've got 3 major projects we want to see developed, and St. Augustine's project is one of them. So here again, it's a near-term producer, Pat. I think that it's got the gold side too, so there'll be good gold credits. It's really an issue here, and the other thing I do like about the Philippines, it's a pro-mining country, particularly in the mining areas. And secondly, you know, there's some areas that you got to stay out of, admittedly. But the other thing is you're close to China. I mean, your shipping costs are obviously next to zero because you're so close. And as we said before, the biggest market in the world is China. So I like this stock because then, again, they raised money in December. And Pat, if you can raise money in this market, that sets you apart from almost all the other copper companies who are in exploration and development, and that's the concern I have for some of them, is that they may have trouble, some of those companies, surviving.
Open pit mining? In that particular case? Or?
And yeah, I'd have to check that, but I believe so, yeah.
So no environmental concerns?
Well, no, in fact, in the Philippines, in the pro-mining areas, the environmentalists, I mean, it's pretty reasonable. They tend to be more related in a few of the areas that are more pristine where they don't want mining. And you know, you can understand that. So generally speaking, in the Philippines, you don't run into the NGOs that you might run into in other countries because they see the value of mining. It's been there a long time. And as long as you're in kind of the traditional mining belts, you're not going to have a problem.
And Highland Copper.
Now, Highland, Pat, this is in the Upper Peninsula of Michigan. That's been a well-known copper area over the years.
Really?
All the copper from that area tended to end up in the auto industry in Detroit or Flint, Michigan, or Saginaw. And so I think it's interesting that that's contracted over the years, but now Highland came in there with a very good management team. Dave Fennell is the chairman. Some of you people that have followed the CFL over the years remember how good a player he was. But I'm very impressed with what he's done after his football career. He's had a couple of companies taken over. He's been very successful in the mining operations he's been involved in. And he's put together a very good project list here because, after all, people didn't tend to want copper projects in the last few years, given the price has gone down. So he's walked in there and acquired some excellent property. He's moved the projects forward, and he again was able to raise a considerable amount of money in December when, again, Pat, there were only about 3 or 4 companies that could, and these were 3 of them that were able to do that. So I think if you want to be leveraged to a higher copper price and you want to be a near-term producers, this is the way I would go.
Coro, St. Augustine, and Highland. Mark,
Right.
great to have you here.
Great to be here.
Mark Lackey.